on the move.
All right, from oil back to the bond market. The 10-year Treasury yield is bouncing a little bit from the lows this session. It's now at 0.59% after going as low as 0.32%. With us now to discuss is Christopher White. He is CEO of BondCliQ. And I know you look at corporate bonds as well. And there, too, we have been seeing unusual activity, one could say, particularly on the high yield side of the equation. Where do we go from here? I guess I keep asking everyone if we're at any signs of stability.
Sure. I think the bond market is difficult to really talk about in the same way we talk about the stock market because we're missing a lot of the key information that we use to understand where stocks are on a minute-by-minute basis. And so there have been a lot of articles out recently about what's happened to the corporate bond market, but the data points that they're using to talk about this large market, and it's a $10 trillion market in the U.S. corporate bond market. So it's not something that you can talk about by just looking at the CDS for American Airlines. But I can tell you that in terms of stability, we are seeing in the corporate bond market a repricing. We are not seeing a sell-off. And those things are very, very different.
How?
Well, a repricing is just a fundamental change and shift on what you think the value of credit is, as opposed to that value shifting because there's massive selling. In fact, right now, if you look at the data that we see at BondCliQ, we're seeing actually net buying of American airline bonds, which is certainly not something that's showing up in terms of American airline equity, which is down. What is it down right now, guys? I'm a bond guy.
I'll pull it up for you while you're talking about it.
All right. So that's interesting because what you're seeing is the institutional investors are stepping in and actually buying a lot of corporate debt. In fact, last week was still net positive from a buying standpoint. So we're not really seeing the panic that we seem to be seeing when we're looking at equity markets.
Regarding American, it's off 4% today, but since, if my chart is correct, it's off almost 40% since the peak.
Sure.
Back February 19th.
Sure, and so when we're looking at stock prices, we're looking at what people believe right now. And clearly right now, a lot of people are concerned. But when we're looking at bond prices, you're looking at investors who are taking a bet as to whether or not American Airlines is going to be able to pay off their obligations. And I don't think we're at a point where we're questioning American Airlines' ability to pay off their obligations, despite the fact that CDS and American Airlines became so expensive. And CDS is, just for your audience, it's really insurance that you can buy. So in case American Airline defaults, then you have somebody who's going to pay off their obligations. I believe one of the reasons why the price of CDS has probably gone up is so many people have gone out there and bought American Airline bonds, and now they just want to hedge themselves.
So I don't know BondCliQ and exactly what it does, but I mean, the liquidity that I've seen at Jefferies and what I'm hearing from the guys that are trading the ETFs and are trading the BWICs and the OWICs from all of the institutional investors are that the liquidity is just dead. It's basically the secondary market is really, really difficult to trade. There's no rhyme or reason. What's happening over in Asia and in Europe is actually twice as bad as what's happening over here in terms of our bond markets. So if you're trying to move any sort of credit outside of the U.S., it's almost impossible, and it's really a seizure. Not to mention there's a seizure in the new issue market as well, and that doesn't look like it's going to change anytime soon. I mean, I don't know what you're seeing on the ground. You had a pretty positive message, it sounded like.
Well, it looks positive from the transactional data. What BondCliQ does is we aggregate the pricing information that's contributed by 36 dealers, including Jefferies.
Okay.
So we're creating a consolidated quote system so that it becomes easier for people to understand where the markets are. The reason why credit markets are seizing is we don't have enough data. So making decisions consistently without knowing things like where are the bids and offers is something that we're trying to resolve as a problem. But you're absolutely correct, because what is happening today is the bid is not out there on the dealer side, that's for sure. Where the bid is coming from is really the buy side at this point in time. But the way bonds trade traditionally is if you want to transact as an institution, you call a dealer, you call a Jefferies or an HSBC or a Goldman Sachs. But that community is not the community that's actually, I think, standing up right now and providing liquidity back to the institutional investors. It seems to be, it's probably the insurance companies picking up yield or some of the savvy buy-side institutions who are looking at all of these dislocations as just being a yield pickup opportunity where they can add to their balance sheets.
All right, well, we'll see what happens in the coming days if that continues, if they continue to have that kind of appetite. Christopher White is CEO of BondCliQ. Thank you.
Thanks for having me.
Coming up, stocks are trading down. We're going to